All right. Hey, Rick, thanks for joining me. We are going to dive right into things today. I'm joined by Rick with Brewery Finance. And if I told people there would be no math, that would be a lie today because I think we might be talking all things finance. So, hey, thank you for taking the time. And it's an important topic, and it's an ever-changing topic, and it's something that a lot of people I think are intimidated to talk about. So. Maybe you can give the listeners a little bit of a tee up on your organization, your story, and we can dive into some things.
Sure. Sounds good, Dan. I appreciate it and appreciate the opportunity. It's nothing to be intimidated about. I was horrible at math in high school, college, and actually, had I graduated college, would have had a degree in English. So I've figured out how to make a career out of numbers, and happy to talk to anybody who needs to hear about how to do that. My company I founded in 2005. It's called Brewery Finance. We've been in business now 20 years, working with breweries and all other kind of beverage manufacturers grow their businesses and provide financing for equipment and working capital.
That's great. And I think that's an important part that, it is that beverage production because more and more we've got members that are, doing things that have crept into other things besides making beer.
For
And
sure.
I know there's this probably a similarity to some of the challenges when you're trying to, get that equipment in, get into a production environment. So good point. So let me, with 20 years experience, can I ask you a little bit on what do you see as some of the changes in the industry as far as for financing and maybe what it was going back 5, 10 years ago to what can people expect in the industry for kind of
Sure.
going forward.
Sure. Yeah, it's interesting. Everything's cyclical, right? When I started this company, it was very difficult to find funding for breweries. I was coming on the heels of the first kind of craft beer boom. Or, of course, back then they were always called microbreweries, right? And microbreweries were after the that first boom turned into a big bust. Um, Banks, traditional lenders, all put microbreweries on their restricted list. They wouldn't touch them. So that's what I was walking into when I started Brewery Finance. But things changed pretty quickly. When I started, it was right at the beginning of where things were just starting to ramp up for the craft beer industry. Um, and we had to knock down some doors, but we got lending approved for breweries again. And it worked out really nicely for probably a good 15 years, which 15 16, 17 years, maybe even, which brings us into that last five couple of years that you asked me about. It was, 5 years ago. Um, I mean, you could literally, well, let's just say money was much easier to find. You put together a decent business plan, you show you have some decent credit and a couple dollars in the bank, and you could get lending from banks, creditors like myself, or lenders like myself, friends and family, investors. The beer industry was booming, and everybody wanted in on it. The water was warm, so to speak.
Hmm.
Um, so yeah, there was a lot more competition back then for the brewers to our beverage producers to talk to and enlist help from. Now we're seeing with a lot of the breweries closing, we're seeing much more delinquency in portfolios. A lot of the banks that we've worked with in the past have gotten out of the beer business completely. A lot of our less traditional lenders are putting them on the kind of a cautionary list. I get for the first 18 years of my career, I had it's probably only three or four delinquencies that I had to help uh, collect on. Um, Very, very few. Now I spend more and more of my time each week working on contacting customers who are having difficulty making their payments and trying to work with my lenders to try to figure out how to make everybody whole and that kind of thing. So it's definitely a challenging time right now. That doesn't mean that the sky is completely falling, but I think that what we saw 4 or 5 years ago with lending being widely available and just anybody who had a dream to open a brewery could open up in a warehouse in a terrible location and be successful. We're not seeing that anymore. We're seeing um, really good breweries failing. We're seeing um, you know, we're seeing good beer that's being made in crappy locations failing. And be perfectly frank with you, I was at a brewery in my town just the other day. I'm not going to say where that is because there's not a lot of breweries in it, but I went to the breweries the first time I went there. It's the closest one to my house, and I I was shocked that it was still in business. Poor
Hmm.
location, diacetyl flavor in all of their beers. Um, Not a welcoming atmosphere, and been there for like 10 years or something like that. So I don't know what the magic combination is,
Yeah.
but it's definitely a more difficult time right now than it had been in the past.
Yeah, I hear you. I think we can all, there are some that I've been to that you spot that I would think that those would be the ones that would be not around, and it seems to make sense. And yet you scratch your head sometimes. They're hanging on, and then other ones that I'm like, they were just great. They were doing everything right. And then you get the news that they're closing. So it does seem
Yes,
like sometimes you just don't know under the hood what's that's going on, what's that's going to. And
sure.
I definitely hear that sentiment you're talking about too of the shift. I guys go to especially some of these national shows that we go to in different industries from the beverage industry, talking to one of the organizations that was there, and he says, I remember there was 6 or 7 banks that would have booths at something like a CBC or an ADI going back 5 or 6 years ago, and you can't find even one, for that. In fact, it's just a testament to the shift of what's been going on. But my question then to you is, so let's say I do have my business plan in hand, and this is where I run into someone who's going, I either brewing planning or someone who's looking to expand and they're saying, "Listen, I've got my credit, I've got my business plan, and I feel like when I mention to the bank I'm a brewery, they're like, nope, no, it feels like their risk profile has probably changed. It's like because it's a brewery, we the doors are closed, or even someone's like, listen, I've been running it for 7 years. We obviously know what we're doing. I've got this. I thought we had a relationship, but because we're a brewery." I get the feedback from people that banks are, it's all being painted with the same brush of like the
Sure.
industry and market has changed. So because it's a brewery, you're going to have a tougher time. Is that accurate, kind of, where that the banks are viewing it as, the overall industry is now, it's
Uh,
adjusted?
I honestly think it depends on the bank. I have relationships with one bank that has been in the beer industry for probably 10 or 12 years. They know it very, very well. And they have pulled back a little bit, but they have not gotten out. I think they recognize that every business needs to be treated on its own merit. Um, when a guy owns a plumbing company and he starts and he fails, that doesn't mean every other plumber is going to fail too.
Yeah.
And so and we see it. We see breweries that are still expanding. We see breweries that are buying up second and third locations because the breweries down the street from them have gone out of business, but they still, for whatever, have the brand and the beer that people want to, or the experience that people really enjoy. And so I think, like, I was talking to a well-established brewer last week, has $1 million line of credit with his bank, a 10-year relationship with the bank. The bank is under new management, and that new management has decided we don't want brewers in our portfolio.
Hmm.
So this guy is left to scramble to try to find a new relationship, new banking relationship. So, um,
Well,
and so I think it just depends a little bit on um, who you're talking to and
yeah.
probably what that particular lender's experience has been with their portfolio of breweries. If they were, if they did good, thorough underwriting and upfront and still are having a problem with our portfolio of breweries, I'd imagine they're going to be wanting to get out. But a lot of these guys, a lot of these lenders didn't do their due diligence up front. And so it's probably not a big surprise that they're having problems with delinquency.
So is that where you see a lot of the, when you are starting to talk with brewers or someone doing a beverage, either expansion or first time beverage, there's a lot of alt beverages and all of that popping up too. Um, is that typically when they come knocking, are you engaged? Is that they said, listen, I stopped in at my local branch that I thought, I hadn't talked to the guy in a few years. I went there, told them what we're trying to do, or I'd done my personal banking there, and I said I want to open a brewery, and I feel like I got the cold shoulder, didn't have the relationship. Is that where you start to get, where you're saying that don't write off the entire banking community? You
Sure.
mentioned relationship a few times, and I'm always surprised by that. I thought it was sometimes that numbers talked and relationships didn't factor in as much, but it seems like it factors in more than I think.
Well, I think there's a couple things going on there. First of all, we are 100% not a bank, and so we don't act like a bank. A bank does a much different kind of form of underwriting than we do.
Yeah,
So it is not at all unusual for somebody to call me up and say, "Yeah, I've been turned down by my bank,"
yeah,
and that doesn't mean that they're going to be turned down by everybody. I always say a bank has a credit window like this, and ours is like this. But when you get something like this, you're going to pay a little bit more, right? Because we're taking much bigger risk. We don't do we don't we don't do a deep dive typically into the numbers unless it's a big project. If we're talking, there's if we're talking a two or $300,000 expansion, then yeah, we're going to have to get into financials usually. But if you're talking, you need a 75 grand or 110 grand for a new canning line or something like that. We typically get that approved on just an application and a couple bank statements. So what we're looking at is personal credit, business credit, but we're not typically doing a deep dive into financials and whatnot. It's different for a startup. Startups, you have to get some information. You got to
yeah.
look a little bit deeper. But yeah, so to answer your question, we do get a lot of people calling us who have said, "Hey, I got the cold shoulder. I got turned down." What scares me is how many people give up because their bank said no. And I guess that frustrates me. But also at the same time, if you're the kind of person who gives up after one no, then you're probably not the right person to own a brewery either.
Yeah. Yeah. The entrepreneurship startup, you're gonna get told no a lot.
Yes,
And yeah, all of that. I mean, that's kind of the, and starting in a more competitive, challenging market than there was just, 5, 10 years ago, like you talked
sure,
about. Uh,
sure.
but
But
that,
there's opportunities in a market like that too, and that's what's exciting is like you and I had talked about before. Um, there's a lot of breweries that are opening up second locations, third locations, buying equipment from a brewery that went out of business, or buying that brand and contract
yep,
brewing, and so there's lots of opportunity. It, there's I think for brewers brewers have always to me proven to be probably the most creative business owners I've ever worked with. And so I think that it's a concern right now, but I think there's an opportunity for those who are still willing to be creative and provide a unique experience to their customer. An exciting tasting room or yeah, I don't know, trivia nights, right? I mean,
yeah.
it's like there's ways to draw people into your tasting room still.
Yeah, I would agree with you, and I think they've put their, and I say this as a small business owner a couple times over. You put your blood, sweat, and tears into it, and so when you start hitting headwinds, you don't just pack up shop and head home.
No,
And to your point, a lot of them are seeing opportunity in, I'm going to add something new to the production, our offering. Someone down the street did close. Maybe that's it's unfortunate for the industry overall, but it might be something that we can leverage, with thinking of secondhand equipment, all those things. So
sure,
that comes to my question, my big question then to you, because like I sometimes feel like when we're talking, especially finances, but other things, it feels like it's this, I wish it was 10 years ago and bring back the heyday. And I think that kind of escapes it's 2025. There's always gonna be challenges to any industry, especially as brewing matures, and there are more. What are you starting to see as, positive trends or success or something that you're able to do in this kind of cyclical market? What are anything that you mentioned that you're getting people who are saying the bank turned me down or cold shoulder, so we're able to run a different process and help people. But is there some things that you're kind of excited about? Do you see it a little more positive than
sure.
negative for this year?
Yeah, absolutely. I was talking to one of my friends who owns a really successful brewery here in Denver, and he reminded me, like, 20 years ago, coming out of those headwinds is, you got breweries like, here just in Colorado, like Avery and Great Divide and New Belgium, um, Left Hand Brewing, all these breweries that have been around for forever. Well, I'm sure they all were struggling 20 years ago, right before things took off again. And they're around. They faced the headwinds, they figured it out, and then they had 18, 20 years of incredible growth. So there's reason to be optimistic if you can stick it out and you can press forward into those headwinds. So yeah, things that I'm excited about. I think this is an opportunity for people to invest in efficiency. To make to really dial in their tasting room experience, which I know I keep harping on, but it's a big one for me because I go out to these breweries all the time, and there's certain ones I keep going back to because it's fun and I enjoy it.
Yeah.
Um, and the beer is just one of those factors. It doesn't have to be the best beer in the world if I can sit down and strike up a conversation with somebody who's sitting next to me and just have a good old time.
Yeah.
Innovation, expanding into new markets. I think that's exciting. We've got another brewery here in Colorado. I'm following them on social media, and it seems like the two owners are every month in a different city in Italy or something like that, opening up a new distribution channel. They're just all over the place. And I'll tell you what, they look like they're having fun. I don't know what their finances are like, but I know that they're looking like they're having fun. Um, and Yeah, I think uh, yeah, innovation, uh, investing in efficiency, new product lines. I used to rarely hear from kombucha brewers, but I hear from them a lot now. They seem to be
Yeah.
doing pretty well.
Yeah.
So I just think there's different formats of packaging or whatever. I think there's just a lot of opportunity for those who are willing to stick it out and to think creatively and take some risk. You know, it's the old. Let's put it this way: the old model is not working anymore. So it's time to try something new.
Yeah, I agree with you. I've seen it across the board. Not even this isn't even at a regional level. I've been to one in a lot of different states in the last 6 months, and I think you're right. I think there is you can't change the industry. It's time to think differently of how am I going to operate over the next 3 to 5 years? And you bring up some things that I've started to hear. I had, for example, on the equipment line and adding new things, I had people that said, 5, 10 years ago when I opened, it was I wanted to grow to a certain point, and then I was going to buy a brand new canning line or packaging line or something, and then we were going to get a brand new forklift, and all of these things were going to be new, and then that was going to drive the growth and was going to pay for it, all that. And now there's this kind of like, we didn't think we would get that line ever because it was too much, but now we've got some opportunities to look at some used equipment, finance
Sure,
it, and to, adjust how we spend our labor. Kind of thing, because that was another changing point too. Is like we could actually get some equipment in here, change a little bit our labor profile on something that we couldn't have done new
sure,
5 years ago or 3 years ago, even
sure.
kind of
Yep,
thing. So I think you're right, thinking a little bit more of down the road and how you thought of things a few years ago. I felt like there was almost sometimes I'd prefer to have it new, and now there's just a good options of financing equipment that's been out there, and that's a big thing. Yeah, and the other thing I hear a lot about too is restaurants are adding more food dynamic, and that brings a whole new
sure.
set of equipment
Yes.
as well to a new dynamic that a lot of them aren't used to. Saying like, I haven't, yeah, we need to finance the new the refrigerators and the stoves and all the fun stuff that comes with that. But that's
Hmm.
another way you talk about atmosphere, the tap room. I totally agree with you. Is if there's some places you walk into and you're like, this is just a fun place to hang out, and the beer's good too, but fun place
Yeah.
to hang out.
Yeah. Well, and I sit there, I think about some of the tasting rooms that I go to, and they have their list of events up on the wall, and I'm sitting there, and I'm like, oh, I don't want to miss out on that, and I don't want to miss out on that, and I don't want to drink every night either, but I'm going there because it might be a band I like. They just provide a reason to keep you coming back, and so I think once you get once you get that regular in there, keep them in there, keep them coming back.
Yeah, exactly. Well, hey, Rick, this is great. I really appreciate taking the time. I know that one of the topics that I get asked a lot about is as I'm planning for growth. I don't know who to be talking to. The way I tried to do it a few years ago didn't work. I'm getting the cold shoulder from people that were happy to take my call a few years ago. It really sounds like, all things finance, that is worth that you got a different process and to pick up the phone and give you a call. Let me ask you, what would be the one tip or advice you would give to either a brewery planning or someone thinking a second location or a piece of equipment? What would you tell them before they pick up the phone or give you a call, or just what do you pass along to someone that who's thinking that?
Yeah, I always, I guess the first thing I think of is a lot of times when people call me and want to talk about an expansion or whatever, buying a new canning line, whatever it is, um, they're usually pretty well versed in how this new piece of equipment or acquiring this other location is going to benefit them. They may not know all the numbers, but they have a pretty good idea. And so I would say the biggest thing is just kind of know your business, know your credit. When somebody calls me and says they want to finance $100,000 accounting line, and I say, well, what does your credit look like? And they're like, I don't know. Um, I, I think most people know if they're paying their bills on time or not.
Yeah,
And so just in those kind of conversations, don't just be honest with them. When somebody says, no, I have great credit, and then they fill out an application and I get it, pull their credit and I see that they're past due on their mortgage. There's not much I can do about that. And I immediately don't trust what I'm being
yeah,
told anything else from that
yeah,
conversation. So, and that doesn't happen very often, but it is just important to know what you're asking for, understand the market. It is not what it was 5 or 10 years ago. The money's going to be more expensive. It's going to be harder to find, but that doesn't mean it's not out there. And it doesn't mean that just because it's a little more expensive, you can't make it work.
yeah,
I tell people it's about cash flow. It's not about rate. If that $500 a month payment um, can can provide you with a piece of equipment that's going to generate $2,000 a month in revenue, then it makes perfect sense. If it can't
yeah,
do that, then it doesn't make sense. And we both need to know that up front because I
yeah.
don't want to finance that either.
No, it's good. Bring the numbers, start having those conversations and be transparent, I think is a good starting point for all of that. So, hey, I really appreciate the time and we'll get the word out. And like I said, if people have questions or just want to start that conversation, you're the expert. So I appreciate you sharing some of that insight and kind of where the industry's been and where it's going.
Yeah, it's my pleasure, and I appreciate the opportunity, Dan. And yeah, I'm happy to take calls, even from somebody who doesn't know their credit score. That's all good. We will figure it out one way or the other.
Go from there. Good to talk to
Yeah,
you, Rick. Thanks again.
likewise, Dan. Thank you. Take care.
You too. Bye.